Class, it's time to get in your bag. Crypto's getting regulated. A bunch of laws are getting passed, and it's time to start stacking up. It's time to start staying down, putting every single dollar we can back into the market, whether that's shares, some cryptocurrency, some tokens, meme coin you believe in. Let's go and let's jump into what crypto regulation means for the future. So what is crypto regulation in the first place? Crypto regulation refers to the laws, rules, and the guidelines set by governments and financial authorities to oversee the use, trading, and creation of cryptocurrencies and blockchain technologies. And it aims to protect consumers from frauds and scams. So as cryptocurrency gets more regulated, as the time continues on, as the government becomes involved into it, the more people are going to be secure into investing into it, okay? And the more people investing into it equals the more money into the market. More money into the market equals new all-time highs, okay? So crypto regulation, just one. It means that it's making crypto safe, okay? It's making it regulated, and it's making it so market can be stable and prevents any type of money laundering activities going on or any type of illegal activities going on for the most part. And it varies globally, leading to regulatory arbitrage. So for example, in the early days, Bitcoin was unregulated, which led to events like the Mt. Gox hack in 2014, where 850,000 Bitcoin were just lost, highlighting the need for oversight, security, safety, and for laws to be into place. Okay. The Bitcoin white paper as well too goes ahead and breaks down the future of Bitcoin, laws, regulation behind it, as well as the protocols. So some history of the crypto regulations. So cryptocurrency emerged with Bitcoin in 2009, and they originally operated in a regulatory vacuum. And over time, governments responded to risk and opportunities alike. And in 2013, the US FinCEN classifies crypto exchanges as money transmitters. And in 2017, China bans ICOs and crypto exchanges. So initial coin offerings and crypto exchanges. So crypto was not being supported within the China at the time. Okay, and then 2021, El Salvador adopts Bitcoin as a legal tender. Okay, so countries start adopting it, countries start buying it. US has been buying cryptocurrency. Other countries have been buying large amounts of cryptocurrency as well too, as of today's date. And 2023, 2024, 2025, EU enacts MiCA, and US faces SEC lawsuits against major exchanges. Okay, and in 2023, that caused Bitcoin to plummet for a bit, but a lot of the lawsuit stuff ended up getting passed. So God is good, bringing power back to the people's hands, making sure that we can control our money the way that we want to. And this evolution really shows a shift from ignorance to active engagement, balancing innovation with protection. So in 2013, for example, the FBI shut down the dark web's marketplace Silk Road, which primarily used Bitcoin for illegal transactions, spurring AML regulations. Okay, so just made people think that Bitcoin was only used for illegal transactions, stuff like that, which is definitely not the case. Okay, it's used to pay people all across the world for legal services that they've done, and just a good way for us to hold unlimited amounts of currencies without any type of centralized currency being able to shut it out. So the current regulatory landscape in the United States. So as of 2025, the US employs a patchwork of regulations from agencies like the SEC, CFTC, and the IRS. Okay. And the SEC, it treats most cryptos as securities if they pass the Howey test. Okay. So if you guys don't know what the SEC is, the SEC is the United States Security and Exchange Commissions. Okay. Securities and Exchange Commissions. So it's pretty much the independent agency that primarily controls everything regarding exchanges. Okay. So let's talk about the Howey test. Okay. So if you don't know what the Howey test is, the Howey test it's a test that the SEC created, and it was pretty much in a case in the Supreme Court that determines whether or not a transaction qualifies as an investment contract or not. Okay, so if it passes the Howey test, then the currency is going to go ahead and be able to be used as an investment portfolio. So yeah, it's going to be able to be classified as something like gold. Okay, so Bitcoin was able to pass the Howey test, and most cryptocurrencies were, and so they can be classified legitimately as actual investments. Okay. So the FTC, okay, FTC or CFTC, let's go and let's talk about what that stands for. So the CFTC, it initially allows spot and crypto assets to be registered and trade as actual commodities. Okay, so the CFTC is something that regulates certain cryptocurrencies, and it oversees Bitcoin and Ethereum as actual legitimate commodities that people can trade with their real money. And the IRS requires tax, so that's why tax is going to be being able to be implemented on these things, because things such as Bitcoin and Ethereum, such as the SFTC regulates Bitcoin and Ethereum as actual commodities, so they have to actually be required as tax. Since they passed the Howey test and they're legitimate actual things, the IRS is going to require tax reporting on crypto transactions via a 1099 form. And the recent approvals of Bitcoin and Ethereum spot ETFs mark progress toward mainstream adoption. So for example, SEC versus Ripple. The 2023 ruling that XRP sales on exchanges aren't securities provided clarity, but left ambiguities on for other tokens. Okay. So upcoming regulations in the US, the Genius Act. So the Genius stablecoin bill is a key proposal for 2025, aiming to regulate stablecoins comprehensively. What a stablecoin is, let's say, for example, if you've heard of the coin USDC, that's going to be a stablecoin. That's going to reflect the US currency and the fiat currency of the United States economy. So the stablecoin is pretty much going to be like the stable dollar version of cryptocurrency that doesn't fluctuate all the time like Bitcoin, Ethereum, and other ones do, Solana, etc. And that requires bank issued stablecoins backed by insurance deposits. Okay, so this way stablecoins can actually be stable. Okay, so nothing can be rug pulled or anything like that because everything is actually insured, just like a stock market would be. So if you don't know how the stock market works before it can actually be listed on the actual market itself, someone has to buy all the shares. A private investor has to pretty much back it up. And it mandates transparency, audits, and one-on-one asset backing. And it prohibits CBDC without congressional approval. So the Genius Act, we're really waiting for it to get passed. And it's really going to go ahead and help cryptocurrency be even more legitimized, especially when people are able to trust things like stable coins and stuff like that. People are going to feel comfortable putting all their money into the stable coin, okay, without it worrying about fluctuation, okay? Or let's say you keep all your money in a traditional bank. If you were to try to get all of it out in cash, it just wouldn't be possible. Or if you try and withdraw a deposit out of it all at once, wouldn't be possible. Cryptocurrency, you could have however much you want of there. You can have however much of it as you want. And you can send however much of it as you want at any time. No limitations. So that's going to be the pros for Bitcoin. And the Genius Act aligns with EU's MiCA for global convergence. So it has to align with every single economy that crypto is allowed in. And this act shifts from enforcement to clear rules, potentially boosting innovation. So let's talk about some USDC compliance. So Circle's USDC already adheres to similar standards, positioning it well under new laws. And the impact of US regulations on users. So new rules like the Genius Act will affect how individuals interact with cryptocurrency. It's going to enhance protections, reduce scam risk, but increase KYC requirements, which are pretty much going to mean that any brokers who are trying to let you trade crypto or crypto futures have to have regulatory laws, jurisdictions passed before they can actually have people trade on their brokerage. So making it very secure, making it really, really scam proof, and just making it extremely nice. Okay. So if you're wondering what KYC means, okay, KYC is know your customer. Okay. Know your customer requirements. And it simplifies tax reporting with Form 1099, but more transactions can be tracked. And easier access to staked ETFs for passive income, and some potential market volatility during transactions. And for everyday users, this means safer investments, but more compliance paperwork. Okay. So as the regulations continue to go, there's going to be more things to enforce when it comes to starting your own broker, trading on certain brokers and stuff, etc. But just know that everything's going to be very regulated, enforced, and safe, inshallah. So for example, for some tax implications, if a user is selling Bitcoin for profit, they must report it. and new forms automate this, reducing errors but increasing IRS oversight. And the current regulatory landscape in the EU, okay, MiCA. MiCA stands for Markets in Crypto Assets and is the EU's comprehensive framework, and it's fully operational since December 2024, so fairly new as of this video dropping. So it classifies assets into ARTs, EMTs, and other crypto assets, and requires CASP to obtain authorization and publish white papers. And white papers are pretty much going to mean the law behind the cryptocurrency token, what it does, which is going to state the future of it and exactly how it operates, etc. And it focuses on consumer protection and prevents market abuse. And transitional periods vary for 12 months for Germany and, for example, none in Lithuania. We'll talk about Binance in the Europe region. So Binance obtained MiCA licenses in several countries, allowing continued operations with enhanced compliance. And some upcoming developments in the EU. In 2025, MiCA's transitional phase ends in many countries, with the full enforcement by 2026. And the end of transitions, December 2025 in some nations, and it aligns with global standards like the FSB recommendations, and potential extensions to DeFi and NFT spaces as well too. And the EBA now gains oversight for significant tokens, making everything regulatory, safe, and pretty much not controlled, but controlled in a sense to where scams and bad things can't go down as easily. And this will harmonize rules across the EU, reducing fragmentation. So for some stablecoin caps, EMTs face issuance limits if exceeding certain thresholds, affecting issues like Tether, for example. And the impact of EU regulations on users. MiCA provides legal certainty, but imposes stricter rules, and provides better fund safekeeping and transparency for its users. Higher entry barriers may limit service options, but the brokers that are going to be available, it's going to make it safe to trade on. And stablecoin users can benefit from some reserve requirements, and their easier cross-border access within the EU. And individuals will enjoy safer ecosystems, but may face increased fees from compliance costs. So, investor protection. If a platform fails, MiCA mandates client asset segregation, protecting user funds, unlike in the FTX collapse, for example. So, some global trends in the crypto regulation space. So, globally, 93% of SFB members plan new frameworks by 2025, focusing on same risk, same regulation. So FATF, 75% jurisdictions are non-compliant with VA standards, okay? So FATF stands for Financial Action Task Force, and it's an intergovernmental organization that's made to combat money laundering and just pretty much scamming in general. So yeah, they need to make sure that it's compliant. Everyone needs to make sure that it's compliant, just so it can't just be used for scams or rug pulls, okay? Because there's also going to be a deceptive side to human beings sometimes, sadly. And, you know, this is why we're trying to be just God-fearing righteous people. So that can be reduced. So thank God that all these regulations are in place. So certain things like scams and stuff like that aren't going to be as common. So some emphasis on the AML, CFT, and travel rule implementation. And stablecoins, regulations, and Singapore, etc., starting to spread across, making it a safe choice for people to keep their money in. Okay. So the US and the UK plans rules for stablecoins and staking in 2025 with the full regimen by 2026. So that's going to be for the UK. I'm not too sure about the US, but for the UK, they're looking into a stablecoin decentralized future as well too. So stablecoins, they're the focus of new regulations. Stablecoins are seen as bridges to traditional finance, hence heavily regulated. Promises behind it, okay? Because it's going to be the dollar, the stable dollar, unlike other cryptocurrencies, which are in an investing capital gain sense where people are trying to make money when it goes up. Stable coins are meant to do what it says, be stable, and they must maintain one-of-one backing with high-quality assets. And regular audits and transparency reports are going to be required. In the US, bank issued in EMT are its classifications and global limits on exposure for banks, 2% tier 1 capital. And this reduces systematic risk, but may limit innovation in algorithmic stablecoins. So for example, let's talk about the Terra USD collapse. So in 2022, UST DPEG led to $40 billion in losses, prompting stricter stablecoin rules worldwide. So after a lot of these crypto losses, crypto crashes, or crypto hacks or exploits, regulations get put into place and the whole system changes. And that's just how we have to learn as human beings, trial and error. Okay, only God is perfect. Sometimes things out. So AML, DeFi, and privacy concerns. So AML stands for anti-money laundering, and DeFi stands for decentralized finance. So anti-money laundering rules are tightening for crypto. So travel rule, exchanges must share users' data for transfers, and decentralized finance protocols may need to comply with know your customer laws. And the balance between privacy and security is coming into play. And non-compliance leads to bans in some jurisdiction because it can go down. They don't want people getting scammed. They don't want people getting rug pulled on. And they don't want a government that allows things like that. And for users, this means less anonymity, but safer ecosystems. So for example, the Tornado Cash sanctions. The US OFAC sanctioned the mixer in 2022 for laundering, highlighting decentralized finance risk. Okay. So if you guys don't know what the OFAC is, OFAC stands for the Office of Foreign Assets Control. Okay. So all of these are going to be just bodies of people just trying to protect money. Okay. Trying to protect people from getting scammed and trying to protect people from losing money for no reason. So what it means for investors, regulation is going to bring more opportunities and challenges for investors. But more opportunities and the safer things get, more people are going to feel comfortable to invest into it once again, which means that more money is going to be put into the market. Okay. So institutional adoption via ETFs, exchange traded funds, and regulated products. Reduced fraud, increasing confidence, increasing more money flow being put into the markets. And clear tax rules when we're reporting, especially as we see companies buy crypto, government bodies buy crypto. It's going to become more regulated over time. And global convergence minimizes arbitrage risk. And investors should diversify and stay compliant to mitigate volatility. So ETF approvals, exchange traded funds. 2024 Bitcoin ETFs saw $10 billion in inflows, stabilizing process post approval. So what does it mean for everyday users? So for non-investors, regulations affect payments, remittances, and daily uses. So safer stablecoins for transactions. Okay, so people are going to feel more comfortable keeping large, heavy amounts of reserves in their stablecoin or in their wallet as well too. And mandatory know your customer rules are going to be put into place for wallets and exchanges. Then faster, cheaper cross-border payments under rules are going to be available. Potential restrictions in high-risk areas could be put into place, and users gain protection but may lose some privacy. And in developing countries, regulated stablecoins could reduce fees from 6% to under 1%. Making it an extremely good option to go ahead and send and exchange currency. So navigating the regulatory wave. So risk, overregulation could really stifle the innovation and cause certain market dips because it's really taken away from the point that people want is the power back to the people. But sometimes power in the people could be a little too much and people don't do right by it. And people can be taken advantage of, and that's not what you want. So opportunities. Mainstream adoption and new financial products could come into as things get more balanced, safe, and regulatory. And they advocate for fair rules, and you can stay informed via reading the white papers and just looking at reliable sources, checking out the news and stuff like that too, to see what's coming out with the crypto laws. And the future is regulated, but it seems promising, power back in the people's hands, and seems to be a place where we can still make some good income and shalom. So EU leadership, for example, Micro positions EU as a hub that attracts firms like Coinbase expanding there. Okay. So in conclusion, crypto regulations are evolving rapidly in 2025, aiming for safety and growth in a positive direction. Some key takeaways. Okay. Understand that as stuff gets more regulatory, it might be more controlled, but it will definitely be safer. Stay focused to God, keep grinding. Head over to StackMODE.net to learn how to trade cryptocurrency. Peace.